Hello my dear students, welcome to online accountancy class. In this session, we are going to consider board paper 2013 from the chapter Dissolution of Partnership Firm. This is a problem. There are two partners, Prashant and Rajesh, in their profit sharing ratio 3:2. In spite of repeated reminder by authority, they kept dumping hazardous material into nearby river. The court order for dissolution of the partnership firm as on 31st March 2012. And Prashant was deputed to realize the asset and to pay the liabilities. He was paid rupees 1,000 as commission for his services. The financial position as on the date, that is 31st March 2012, was as below. So here you can see all the known term. Building 1,12,000, investment 30,600, debtors 34,000, and provision thereupon like for doubtful purposes 4,000. So net debtors 30,000, bills receivable that is 37,400, cash balance 6,000, profit and loss account that is debit balance. It is a fictitious asset 8,000 and one intangible asset goodwill provided 4,000. The liability side also the same way. There are two outside liability, Keita's wife of Prashant loan, partner loan that is Rajesh loan, investment fluctuation fund. It will be fund here, and the capital of both the partner Rajesh and Prashant equal capital 42,000. Both the side asset and liability are equal 2,36,000. Other terms and condition. Now Prashant agreed to pay off his wife loan. So initially we know that there are two phases. First phase, that is transferring entity, asset will transfer two side except cash PL, this two, because this is liquid and this is fictitious. Rather than goodwill, beer, data, investment, building, all you have to transfer. Provision will goes to the liability side. So two sundry asset and by sundry liability, that is primary phase or first phase entry. After that, second phase entry, like Prashant agreed to pay off his wife loan. So when any liability takeover by any partner to discharge the liability, so that time the entry will be just opposite. Realization account debit to Prashant capital account. Debtors realized 24,000. Inflow of cash, that is bank to realization 24,000. Second partner Rajesh to cover all investment at an agreed value rupees 27,000. Asset takeover. So by Rajesh capital account debit to realization. So therefore by Rajesh capital account. Now building realized 1,52,000. By bank 1,52,000. Caterers were payable after 2 months, but they were paid immediately at 10% discount. Here one thing you have to notice here, 10% per annum what is not provided. So here time is immaterial. Full discount can avail. Like here discount receipt will be, then caterers amount here 80,000, there upon 10% means 8,000. So 72,000 net amount you have to pay to the caterers, 8,000 discount received. Bills receivable was settled at a loss of rupees 1,400. So we are settled at a loss means we are amount here provided 37,400 minus this amount 1,400. So 36,000 it is recovery amount. So bank to realization, that is by bank in realization account. Final realization expenses rupees 2,500. So realization account debit to bank. This is a simple type of problem. Now this part, like Prashant took the responsibility regarding all like recovery. So as a commission it is provided, and like there are 4 situations already I had discussed. So any of that situation arises. So this way, that is the agreement between partnership firm and Prashant. So that commission, that amount, like we have to think that is just the realization purposes commission it is provided. So it is commission payable ultimately and to a particular partners. It is a one-way expenses. It is not paid by cash. It is charges. So therefore, realization account debit to, we can think to Prashant capital account. Realization account debit to Prashant capital account. It is allowed or payable at that moment. It is not paid by cash. If it is paid by cash, cash outflow is there. That time so we can make the entry realization to cash or bank. Let's see the solution here. So first the realization account, first phase entry, all the asset here, building, investment, data, via goodwill, there is fixed asset as well as current asset and their book value. Building 1,20,000, investment this amount, data this amount, via this amount, and goodwill. So first phase entry for transferring of data, building, investment, data, via goodwill. Now first phase entry for transferring of liabilities, provision for doubtful debt creditor, wife of Prashant loan, and investment fluctuation fund. So when asset transfer like investment fluctuation fund and workman compensation fund, both are not same, there is some differences there. Already I have explained related to workman compensation fund, but in case of investment fluctuation fund, just you have to put one time, single time, that is by investment fluctuation fund, just like a provision for doubtful debt. The same way it is a fund against a particular asset, so asset it is transferred this side. So ultimately that fund against that, like to maintain the investment fluctuation value, we have to put on the credit side here. So 8,000 it is single time treatment. So first phase recording entry, asset side 1 2 3 4 5 and 1 2 3 4 4, liability side 4. Now afterward one by one adjustment, like first one, like Prashant agreed to discharge his wife loan, so therefore it will be 2 Prashant capital 40,000. After that Prashant will be payable like commission, that is 2 Prashant capital, again that is commission payable, it is at that moment. Now after that, like recovery of asset, data recovers 24,000, building 1,52,000, bills receivable at a discount 1,400, so net amount 37,400 minus 1,400, that is 36,000. The total inflow of cash related to asset recovery, and here ultimately total amount is coming to 2,12,000. Now after that, related to investment, it is mentioned that Rajesh want to take over that investment at the agreed value 27,000. So here investment value it is lower, but at that moment maybe market value high, so therefore I just want to pay market value not high, investment value 30,600 and Rajesh is taking over by 27,000, so it does mean that market value it is low, so therefore Rajesh paying lower amount, 27,000 is paying. The takeover means by Rajesh capital. Now after that, like creditors related one information is there here. Creditors were payable at 2 months, after 2 months, but they are paying immediately at 10% discount, and 10% per annum not provided, so you have to calculate only just 10%, 80,000 there upon 10%. If you calculate, it is coming 8,000, 80,000 minus 8,000, 72,000 for payment of creditors. Now realization expenses it is mentioned, lastly realization expenses 2,500, so that is being also paid, and it is outflow of cash, so together 2 cash, creditor payment as well as realization expenses, altogether coming 74,500. Now we'll compare credit and debit. Credit side is coming heavier by rupees 29,500. It is a profit on realization which will be transferred to the partner, that is Prashant and Rajesh, in their profit sharing ratio that will be distributed. That is their profit sharing ratio 3:2. So on that ratio, realization profit it is being distributed. Now afterward we have to prepare like partner's capital account. Now if you want, we can make also Rajesh loan account also, because one partner loan is provided, and if you don't want to open, then you have to show directly in the cash ledger. So next ledger, that is next main important ledger, partner's capital account, which have to show the final payment here. Opening balance provided 42,000. Now realization, that is commission to Prashant, that is just reverse posting at the time of making partner's capital account. Just we will check their first realization as well as the old balance sheet. So old balance sheet, old capital 42,000. So here opening balance 42,000. Now this side here 2 Prashant capital, so reverse entry, that is by realization again by realization, that is discharge of wife loan, So to time another the profit on realization, that is here two partners capital this amount. So again that is by realization within bracket profit this amount 17,700 11,800. After that this side here regarding that this side also we have to check here even yes Rajesh capital is there, Rajesh capital in realization account, so corresponding or contraposting to realization, that is 27,000, and there is one fictitious asset which I have to transfer to partners capital debit side. In the old balance sheet that was provided here, profit and loss account 8,000. So here to profit and loss account, here to profit and loss account, it is under old ratio and investment taken over entry, and that is the final payment. Like Prashant will get back 95,900 and Rajesh will get 23,000 as well as 600, 23,600. That is for final payment. Now at the time of making the realization account, one thing you have to see regarding the goodwill purposes, nothing is mentioned here. So as per rule of partnership act, if nothing mentioned regarding the recovery of any particular asset, that time it has been assumed that particular asset value coming into the zero. So needless to show y side cash goodwill value 0, just we will ignore that part. But regarding if any liability purposes nothing in mentioned, that time you have to consider that is full payment we have to pay, the full payment we have to make to the respective lender. Otherwise they will not leave to take or to withdraw the cash from the partnership firm. So that is the thing here regarding the goodwill, nothing mentioned, so we'll ignore that part. No corresponding entry will be there. Now this is the final payment. Afterward we can consider that is main ledger, last and final ledger, cash ledger, and Rajesh loan account. If you want we can open also Rajesh loan. So the one more entry will be there, Rajesh loan account. It will buy balance VD 24,000 and 2 cash on bank 24. So cash and bank account it is coming by Rajesh loan 24,000. Now afterward once we can check realization ledger account, like buy side cash 2,12,000 and two side cash 74,500. So these two corresponding entry will be there, like buy realization 74500, outflow of cash, inflow of cash to realization 2,12,000, and after that we will check that is partners capital or final payment. This will come again here on cash account, cash ledger, like buy Prashant capital by Rajesh capital. So here that is a value based question. So this value is providing to the society. So the value being conveyed in this question is a social value as a dumping hazardous material into river pollution to the environment, which ultimately affect the society as a whole. So this one line you have to mention here. So this is our problem as well as solution for the year 2013. Necessary ledger account here, that is realization ledger, partners capital, cash, as well as loan account we can open also. Rajesh loan, that is partner loan is there, and if you don't want to open, that time directly buy Rajesh loan for making payment in cash ledger you have to put. So this way it is the board paper class 12 main exam 2013, and we solved and we got the idea. Now I'm going to conclude this session. Okay, thank you and God bless.